In Screwed News, back in 2011, the Financial Crisis Inquiry Commission released a report detailing the causes of America's financial and housing collapse in the late 2000s. A portion of the report focused on the role that accounting control frauds played in driving that financial crisis. As part of one of those frauds, all across America, mortgage companies and big banks were pressuring home appraisers to artificially inflate the prices of homes. And appraisers who refused to cooperate ended up blacklisted. According to the FCIC report, a survey in 2003 found that 55% of appraisers surveyed had felt pressured to inflate the value of homes, and that by 2006 that number had climbed to 90%. In other words, it was a huge problem. Fast forward to today, and it looks like appraisers are once again being pressured to inflate home prices. So what's going on here? And how is this deceptive practice being allowed to make a comeback? Joining me now for more on this is Richard Eskow, Senior Fellow with the Campaign for America's Future and host of the Zero Hour radio program. Richard, welcome back.
Always good to be with you, Tom.
It's always great to see you. How big a problem was appraisal fraud in the build-up to the financial and housing collapse?
Well, it was enormous. I mean, the statistics you read alone tell the story. 90% of appraisers feeling pressured to inflate the value of a home. When an appraiser inflates the value of a home, the homeowner ends up borrowing more than they need to, giving more in payments to the bank than they need to, going at higher risk of foreclosure or other difficulty. More people get thrown into underwater homes when the market corrects or has a downturn. It threatens the entire global economy if it goes too far, as it did in 2008. I mean, the implications can't be overstated. You're defrauding investors who buy mortgage-backed securities. You're defrauding the shareholders in banks. You're putting the government on the hook for rescuing too big to fail banks. I mean, it sounds like a little problem, almost like rolling back the odometer on a used car. It's certainly morally no better than that, but the implications reach everywhere, and a lot of people get, to use your word, screwed as a result.
Yeah. Explain to us how it works. What did the mortgage companies and the big banks have to gain from pressuring appraisers to inflate home values when the potential was that it would produce another crash? And what's in it for the and it's criminal. I mean, what would motivate them to commit a crime?
Well, if you had a system that was designed rationally, then people who wrote these loans, the loan officers and the people above them, would be rewarded or penalized based on whether the loans they wrote were sound and matched the values of the homes and all that, because of course it puts the institution at risk if you lend more money than the assets you're paying for. Then you have no collateral for your loan, or you have insufficient collateral. So in a rational world, they'd be rewarded accordingly. But the way the incentives work, everybody in the banking system, especially the loan officers, makes more money if it's a bigger loan, and then they're able to make more money again if they sell that loan to a third party. Their books look better and so on. So there's an element of accounting fraud in it. So they have a motivation to make these loans bigger, to lend more money, to reap more profits from it, even if it means putting the bank and ultimately the system itself at risk. They're not rewarded or penalized for that. And as far as committing a crime is concerned, if nobody's ever indicted for committing this particular crime and they have a financial incentive to commit it, there's no reason why they won't.
Well, and I guess that's what's going on. I mean, the FCIC report was released in 2011. And to the best of my knowledge, nothing was done to punish banks, mortgage companies, or for that matter, the appraisers. This seems to be, correct me if I'm wrong, I mean, just having bought houses over the years and been a kind of sidewalk observer of the housing market, it seems like this is a relatively new thing. At least new to the last decade and a half. What happened? What made this possible? Or was it always possible and all of a sudden criminality just came into style?
Well, I think it's a variety of factors. It's a great question, but I think one of them is socially, in the more broad social sense, over 40, 50 years, people began to, and I think the economy needed outlets, ways to appear as if it were growing. So I think there was a big, a big sense of rush to home ownership, and a sense that this was an opportunity to invest as well as have a place to live. I think banks saw that as an opportunity to enter into criminal and fraudulent behavior. I think the relaxation in the 90s of regulatory oversight of the banks gave them, now had the motive. That gave them the opportunity as the deregulation fervor hit in the 90s. So I think it was a combination of motive and opportunity, and they seized it. A lot of conservatives try to blame, the Community Reinvestment Act or other things to help lower income people. That's not what this is about, because the fraud, the banking fraud, the appraisal fraud was just as bad at the higher end of the spectrum for very expensive homes. So it's not about poor people. It's about bankers seeing an opportunity with a lack of oversight and regulation, lack of law enforcement, and seizing it because people wanted to invest in homes, and the housing bubble, was getting ignored for years at a time.
Texas Senator Phil Graham's wife, Wendy, was in charge of the Commodities Bureau in the, what was it, the Clinton administration? I forget which administration it was. And she loosened up those rules. But then her husband, Phil Graham, Senator Phil Graham, really blew it out with Gramm-Leach-Bliley, which did away with Glass-Steagall, which was the law dating back from 1935 that kept commercial banks separate from gambling banks, investing banks. And also with the Commodity Futures Modernization Act. Both of these were apparently at the behest of Ken Lay, so that Enron could run their own bank because they were getting flack from their bankers, and so that they could engage in commodity trades in unregulated markets, the commodities being energy and oil futures and things. Are we seeing the echoes now of that? Is that one of the principal things that helps set this up, or is that peripheral to this?
No, I think deregulation in general is very central to all of this. I think, I'm not sure this is the kind of derivatives play we saw in the last decade, but I think the whole atmosphere of the time, let's not forget Bill Clinton's signed the Gramm-Leach-Bliley Act at the encouragement of then Treasury Secretary Robert Rubin, who became the CEO of Citigroup. So, I think everybody got a piece. And I think that was part of the Washington side of the equation. Yeah. It looked like there was a boom going on as the housing bubble inflated. Everybody got a piece of the action. The few people who warned against it, like Mrs. Graham's successor, Brooksley Born, were beaten down or criticized. So
yeah, it was a good time last party. Richard, just 30 seconds left. Real quick question: with this happening right now? Is this setting up another housing bubble that's going to blow up in our face?
That's what I worry about. That would keep me awake at night, and we have no reason for it not to happen unless we get much more aggressive with law enforcement and regulation than we are right now.
Remarkable. I think you are so right, and this is so concerning. Richard Eskow, it's always great to see you. Thanks for dropping by tonight.
Great to see you.